Hello and welcome to this section on COT report, Futures Peak. This section is aimed at showing you how to gain an unfair advantage in the markets using the commitments of traders report. I'll be running through the slides and showing you some important points, after which I will take you to the very websites where you can get this report handy, and then we'll show you how to use the report to make profitable trades. I believe that with this report you will experience tremendous improvement in your trading career. Let's go. What is COT report all about? That's the question I'm sure you will be asking. Why haven't I paid attention to it? Why haven't I heard it? For some watching this video right now, I'm sure it's absolutely a new concept. You're just hearing it for the first time, or you have been hearing it and it's sounding like Greek to you. Well, it's in existence, and it's one report that is very, very valuable to traders all over the world. First, we'll begin with understanding the market sentiments. Traders have their different views about the markets. Some buy, others sell, depending on their understanding or lack of understanding of the markets. And some win, some lose. But the overall market sentiment is the combination of the views, opinions, and ideas of all the market participants. Market sentiment, therefore, is the combined feeling that market participants have about the market. Market sentiment is the combined feeling that market participants have about the market. It is the dominating emotion or idea that the majority of the market feels best explains the current direction of the market. Then how do you develop a sentiment-based approach in trading? Well, there is every need as a trader to always gauge what the market is feeling at every point in time before taking a position. Try not to dictate to the market what it should do. You know, as newbie traders, even intermediate traders, we have been very guilty of this. Sometimes we form an opinion on the market on our own without any basis, without any form of reasons why we are taking such position. We just take it because we feel that it has been falling for so long and that it should start rising without any basis at all, and it's wrong. And that's why our accounts have been hurt over time. I believe that with a proper understanding of this concept and developing a sentiment-based approach, our trading experience is going to change dramatically for the better, and I believe that we will begin to make and lock in profits. You begin to ride on the wings of the trend. You see, with this information packed in this work, I believe that it's time we begin to trade like the eagle, ride on the wings of the wind of the market, meaning riding on the trend. So try not to dictate to the market what it should do. Find out instead what the market is feeling, and try all your best to follow the market to increase your profits. React to what is happening in the market. That is what developing a sentiment-based approach is about. But caution with market sentiments approach. Listen, market sentiments do not give exact entry and exit parameters for each trade. You must note that. Note it. Market sentiments don't give exact entry and exit parameters for each trade. It only allows you know the flow of the market, and then decide whether to go with it with flow or not. So when you know the flow of the market, you now make up your mind based on the overall sentiment whether to go with the flow or not. In order to take this drawback away, in order to take care of it, in order to handle it and remove this bottleneck of not exactly knowing where to enter or exit, we advise you combine your market sentiment approach with technical and fundamental analysis. Now let's look at, first of all, the difference between stocks and options versus Forex. Now, in stock and options trading, traders can use volume to determine market sentiment. You see the drawback we have with gauging sentiment. But then in stocks and options, traders can use volume to determine market sentiment. Rising stock price against declining volume and vice versa. That is, when price of stocks and options are rising, traders can gauge it against the volume. When stock prices option prices are falling, they can also gauge it against the volume and determine whether the market is overbought or over. So, for example, if stock prices are going up, options prices are going up, and the volume, because there is a centralized exchange where these things can be monitored in the stocks and options market I'm talking about now, they can watch and see if the volume of the same stocks or the same sets of stock that are rising, if their volume is agreeing with that rising in price. If volume is no longer agreeing with rising prices, for instance, if prices are going up and volume is declining, getting smaller and smaller, it's an indication that there's a probability that this market has been overbought. And so you begin to take your profit or exit the market because it's an overbought area. And also the other way, if prices of stocks have been falling and falling, and suddenly you check and volume is increasing, it's an indication that, hey, this may have reached an oversold area. So you may stop selling and prepare to start buying. Now, this is possible to identify in the stocks and options market because there are exchange centers where you can monitor this, as I said. But in the forex market, it's not possible because forex is done over the counter. There is no centralized exchange market, there is no centralized exchange center, so it's difficult to ascertain volume traded per period. So how then do we solve the problem? Now to the rescue. To prevent currency traders from being at a loss on volume traded on particular currencies, something has got to be done. And what is that? That solution that can now help traders determine volume traded on some currencies is what this section is about, and that is called the futures peak, which is using the COT report to determine volume in foreign currencies trading. COT, that's Commitment of Traders report. That is what this section is about, and we'll get to know more what it's about. What is it? What is COT report about? Well, COT report is published by the Commodities Futures Trading Commission in the United States. This report measures the net long and short positions taken by speculative traders and commercial traders. The COT report is a great resource to gauge how heavily these market players are positioned in the market. These market players include the hedgers, large speculators, and retail traders. And of course, you see, for them to take this position, I encourage you to, you see, don't take this in isolation. Study US dollar index very well. Study the equities markets very well. Study the commodities market very well, because the position that these large speculators take are not in isolation from what is happening in the equities, stocks, commodities, and the other markets. The US dollar index, actually, they watch these and they take position. If, for instance, US stocks are doing well, the equities market in the United States are doing well, and the equities in the UK or in Europe are not doing so well, of course, you then find out that the commitment of traders will now tilt towards favoring the US dollar. So take note of that. All these things are part of the things you should be studying as a trader. Don't just wake up in the morning, clean your eyes, and jump into a trade. Take your time first, study, know where the market is going. When the newbie traders, those who do not know, you see, what makes you rich in this market is the knowledge you have, the information at your disposal. When others are jumping in and out, you sit down, sit back, give at least 30 minutes or 1 hour, or even 20 minutes, just go through, find out what's happening. By the time you check out the tutorial on the what's it called, equities, and how they correlate to the forex market, you find out that it doesn't even take you much. Just go to the website, check out what is happening to the equities market in the US, what's happening to the commodities market, to the equities market in Europe, what's happening to equities market in in Asia, and from there you form your bias. You then be able to pick which currency pair you want to trade based on that information, and of course based on that you will be able to. But when they are balanced, sometimes you find them all in green. When they are balanced, you may then use your discretion to pick what you want to trade, and then. But when these things are very clear and obvious, do not shoot yourself on the foot. Okay, so we'll just make progress with this. Then where do you get the COT report and how do you read it? Well, the COT report can be got from the website of the CFTC, that's the Commodity Futures Trading Commission. Just log on to your website on your browser. Just log on to your browser, www.cftc.gov. Alright, when you are at the website, you just follow the points listed there. Just point your cursor to the market report. I'll be showing you this in practical terms. Of course, after that, when it opens, you scroll down toward the bottom of the page and you find current legacy reports, and then you look for the row on Chicago Mercantile Exchange, and of course under the column of futures only. From there you click on short format, and then you have the COT report. Okay, we'll be doing that shortly, and then this is what you'll see. Okay, when you click on the short format here, when you click on it, it will then bring out the report itself. Now, if you now get the report, to find what you need, just press Ctrl F, and a small box opens, and then you type what you are looking for. For example, if you are looking for euro, you just type euro, and you see euro, FX or euro dollar being gradually highlighted. These are just the 3 steps. Step number 1, get to the website of the CFTC. Right, when you get there, go to market reports. That's still on step number 1. When you open, scroll down to the legacy report. That's step number 2. Get there. When you get there, click on short format under Chicago Mercantile Exchange under the futures only row, and of course you then get the COT reports. These are the 3 steps involved in accessing the COT reports. Now, for you to interpret this, you'll be finding terms like commercial, non-commercial, long, short, and all of that. I will be skipping this and go straight to the crux of the matter. I'll be taking to a website, commitmentoftraders.com. They've done a very great work there. You can also get further information on this on babypips.com. But let's quickly go to the commitmentoftraders.com, and then we'll look for the interpretation for all these categories you'll be seeing on the COT reports. You have the commercial, the non-commercial, and the long, short, and all of that. Let's quickly get there. Now, first and foremost, I want to go to the CFTC website. I think we have it here already. Okay, just go to cftc.gov rather. cftc.gov. Alright, here we are on the website of the cftc.gov, the index page. That's the home page. And look at this, commitments of traders. The commitments of traders COT reports provide a breakdown of each Tuesday's open interest for markets. Current report date is 30th of December. You can view the weekly reports when you click here. Now, the COT report is done weekly. I should mention it. It's actually released on Thursdays, but by Friday it's accessible. By Friday of the week it's accessible. So just take note of that. So every Friday you will come to this place and check what the report was. It's released on Tuesday, and then by Friday you can access it. Alright. Now the data you can read. Just take your time and study this website. But let me just quickly take you to the commitmentoftraders.com websites. But first, look at this. The Commitment of Traders COT reports provide a breakdown of each Tuesday's open interest for markets in which 20 or more traders hold positions equal to or above the reporting levels established by the CFTC. So that's positions held above or below the the levels supported by CFTC is what will drive the market either up or down. So now let's go then go to Commitment of Traders website. That's www.commitmentoftraders.com. Commitmentoftraders.com. All right, you can come to this side. The owner of this site also has the indicator, a kit you can buy for about $199 or so. You just take your time and go through this side. This is the COT indicator he has developed. It's for sale, so you can buy it. I don't have it, I don't use it. Just checking the numbers and interpreting it for me, I think it's still okay, but then you can still maximize the opportunities by going here to buy. But let's look at COT data. Let's look at the COT data. Now, how to read commitments of reports, or traders reports. How to read the commitments of traders reports. Public about futures markets. The Commodities Futures Trading Commission has improved the COT in several ways. The COT report is published more often, switching to mid-month and month-end in 1990, to every 2 weeks in 1992, and to weekly in the year 2000. The COT report is released more quickly, moving the publication to the 6th business day after the as of date 1990, and then the 3rd business day after the as of date 1992. The report includes more information, adding data on the numbers of traders in each category, a crop year breakout and concentration ratios, in the early 1960s, and data on option positions 995. The report is also more widely available, moving from the subscription-based mailing list to fee-based electronic access 1993 to being freely available on the Commission's internet website since 1995. The COT report provides a breakdown. The COT reports provide a breakdown of each Tuesday's open interest for markets in which 20 or more traders hold positions equal to or above the reporting levels established by the CFTC. The weekly reports for the futures only commitments of traders and for futures and options combined commitments of traders are released every Friday at 3:30 p.m. Eastern Time. So if you are in Nigeria now, add 6 during winter or fall. The summer, during summer you just add 5, so meaning that 3:30 p.m. now should be around we are now 6 hours ahead of the US time now, so this will be around 9:30 p.m. it will be released on Friday. So from 9:30 p.m. every Friday during this time, you log on to the website and you find a report by Friday this week. Just try and check it, and you will find a report for this week. This will help you to even plan your trading for the coming week. Just go over this thing, and I believe you will get the gist of the whole thing. I want to very quickly, because for timing, I want to go down quickly to show you how to use this on how to access the COT report from the CFTC website. Now, right here on the website, we want to scroll up, go to market reports. Remember I said when you go to www.cftc.gov, under market reports, you go to commitment of traders, click on it. Now it opens, and then you scroll down to the bottom of the page. You can see reports dated December 27th, 2011. Keep scrolling down. Now you get to current legacy reports. These current legacy reports. Look for Chicago Mercantile Exchange. Here is it. Now under there, futures only. Under futures only, this one is futures and options combined. So you are going to futures only. Under futures only, go to the short format, and there you are. Now when you are here now, let's say you want to find out about the euro. How is the euro faring? Just press Ctrl F. So you type euro there, euro, and then there you go. You have euro dollars, euro FX, just there. That's where you are. Now under here you will now see the non-commercial, the commercial. So we are looking at the non-commercial. Our concentration will be on the non-commercial. So under non-commercial you see long, short, spreads. So our focus will be on long and short. How many non-commercial traders are long on the euro? Check here. Contracts of $1 million commitments. Contracts of $1 million commitments. How many are long? 300,435 are long, and short 802,444. Now, this is the information I require. This is what I require. That out of this, about 812 are short on the euro, while 300,000 are long on the euro. What does that tell you? That euro will fall. About 812 are selling the euro, while only about 300 are buying it. So with this position, euro is going to crash this week. So you open your chart and find out what's happening. Is euro actually falling or rising from the beginning of the week? You check it. So when you see this kind of thing now, go back to your chart. If euro is going up, rising, by the time the market opens on Monday, and then if euro is rising up or going up, that's rallying. What that tells you is that it's rallying to give you room to sell. You don't just rush into the buying. Take your time. Once you have gotten this information, perhaps you may want to now check the dollar index, and then and find out if actually the market if the dollar is impressive. Also, you may want to compare the equity markets also and know if the market is also agreeing with what you're doing. Once that is done, you'll find out that you are on easy streets. Okay, now look at the dollar index indicator going up, showing that the dollar is strong on dollar index, and the COT report says the non-commercial traders, much more of them are selling. More than half of them are selling the euro, while just a little fraction is buying. So euro will continue to fall. Now, on our yearly analysis, the euro USD has broken the support, the low recorded in January 2009. We drew this in our analysis. This is the bottom of 2011 rather. He had broken the low or the bottom of January 2011, so he's trading below it right now. So this is about 4 minutes. So if the market closes below it today, then we'll experience more selling of the euro. Okay, so that is how to use the COT report. The COT report has told us that more traders are selling the euro more than the number of non-commercial traders that are buying it. You might want to search for another pair. Let's look at for the GBP, the pound sterling, GBP. You can see it being highlighted there. Just press enter. Okay, you have it there. That's it. So let's just scroll up a little. Okay, on the British pound sterling, Chicago Mercantile Exchange, non-commercial contracts of 62,500. Of this number, 25,000 are long, 54 are short. And what does that imply? That there will be a selling of the pound sterling. GBP USD should be going down, and that is what we've been having here. All right, you may want to. So this can really help you. See if you can find JPY. That's JPY there. The non-commercial, we have a total of 12,500,000. 52 are long, 30 are short. What will happen to the JPY? Check out JPY or the CAT JPY, and you find out what's happening. Let's look at the Japanese yen. This is it. Japanese yen is going down, so you can see that. Now, if you look for JPY, it's going down. If you find Euro JPY, you find out that they will all be going down. Let's look for Euro JPY in this regard. Let me look for Euro JPY. Euro JPY, okay. It's at 98. Can you beat that? Look at it. Euro JPY is down. So that is the magic or the miracle you can get from having this handy from the COT report. So if you have been studying, following these markets, you would have been short on several of these currency pairs. You have been short on Euro JPY, you have been short on Euro USD, you have been short on USD, you have been short on even USD JPY, and you can imagine. But you see, so I encourage you to always invest your time. Don't ever rush into the trade. Let's see if we can find CHF. Let's search for CHF and see. CHF. Okay, there is it. CHF 125,000. Number of long non-commercial traders are 3,000, and number of short are 14,000. So you shouldn't do anything buying CHF. Be selling it. USD CHF should be rising. Euro CHF should be because the number of traders that are even short on the long on the euro are higher than the number of traders that are long on the CHF. So euro CHF should be going up also if you want to trade that pair. So euro CHF should be up if you want to trade that pair. Check it on daily. It's up. It's on the upside. Okay. So even though it's kind of ranging because both euro is weak and that one is weak, but then you can see the difference there. Now that is how you could use this report. And of course, if you now apply your technical knowledge, you know that you should be buying on this pair right here. Okay, now let's go to USD CHF. You can see that it's on the upward surge. US dollar index is strong. US equities are strong, but Europe equities are poor. They are weak. They are in red. And COT report also has shown that you should be long on this currency pair. So with this, you are able to take a good position. You will be doing guesswork. Guesswork ends with this information I've armed you with here, and I believe that as you continue to use this, all right, you are going to improve. In the days ahead, I'll be combining this information and pick more trades, and I believe that you will learn more from doing. Thank you very much for your time with me on this program, the Forex Freedom course, and I believe that indeed your freedom in Forex has surely come. Trade to win.